Hello everyone, and welcome to the webinar today. Today we have Avalara with us, and they will be presenting on automating tax compliance in NAV. And we just have a few housekeeping tips. We do record this webinar and all of our webinars, so if you're interested in reviewing it again or sharing it with any of your colleagues and friends, you're more than welcome to do so. It will be available on our website later this week for you to do that. That's Innovia.com. And if you have any questions, please feel free to type them into the questions box, and we will get them called out toward the end of the webinar. So I will turn it over to Stacy, and she will begin our presentation.
Wonderful. Thank you, Angie. And thank you all for taking the time to attend today. We are going to tackle the topic of automating tax compliance within Dynamics NAV today. My name is Stacy Dozie. I'm a Strategic Alliance Manager at Avalara, and as Angie said, we'll make sure and have time for questions at the end. So today we're going to talk about a couple of topics. We're going to talk about some of the tax compliance challenges, why location. Can you all hear me okay? Sorry.
Yeah, sorry,
so we're going to talk
Stacey.
about why location. Nope, no problem. We're going to talk about location, and this is not all about marketing, but this is more about why tax matters. Some other taxability troubles and automation advantages, so why it makes sense to automate. So let's first talk about some of the tax compliance challenges. Right now, our country is really in a state of flux when it comes to sales tax. There are a lot of things going on. The economy is growing. Retail sales or online sales are making a big impact in things. And states are really trying to figure out how to optimize their income from sales tax. So right now what that means to a lot of businesses is there's a lot of risk going on in their day-to-day environment as it relates to sales tax. Just to give you a little clearer picture of some of those numbers and what that means, right now, income coming into states is about 47% or almost 50% of that revenue comes from transactional sales tax. So anytime that you're submitting tax to a state, that's making up almost 50% of their revenue. So states are trying to figure out how they can get more. Obviously, every state is trying to figure out how to do things in their state when it comes to roads or education or different things. So more money means more things that they can tackle. So the easiest way is how do we figure out how to get more sales tax into our economy. To give you a couple of ideas on how states are doing that, one of the main ways they're doing that, aside from just regular waiting for those tax returns to come in, is through audits. So just to give you an example, California actually hired 100 auditors over 3 years to focus on collecting online sales tax specifically. And then Idaho, for example, had 48 temporary auditors that are now full-time in their state. So states are really looking at how to increase revenue from sales tax into their revenue bucket. On top of that, online sales are really hurting states. States are losing something to the tune of $24 billion from uncollected e-commerce sales. I mean, if you think about it, how people used to shop, people used to go downtown to their local store and shop, and they were paying tax in their state, and the states were collecting all of that. Well, retail sales is taking away from that. You may have somebody whose business is located in Alabama, for example, and who knows what their tax laws are there, right? And when they send them to you, now they maybe aren't charging you sales tax, so your state isn't collecting any of that. So states are really fighting to figure out how they can still bring in that income from online sales, because they're no longer getting it from all of the day-to-day shopping that people maybe were doing locally in their own state. And they're losing a lot of money when it comes to that. Another stat here, when it comes to accounting and finance professionals, this came from a Wakefield research report or a study that was done. And 69% of accounting and finance professionals are saying that sales and use tax is one of the most confusing parts of their jobs. And on top of that, a lot of these professionals, that's not the only part of their job. They're doing a lot of other things. They may be involved in month end, they may be involved in financial reporting, business analysis, any number of things, but 69% of them are saying that sales tax is the hardest part of their job. And this is really not something that they want to focus on. So let's talk about some of the things that are important. We're used to talking about rates when it comes to sales tax. Most people are really, just think about what is my tax rate? How much is being added on to my transaction? But there's so much more that goes on when it comes to being tax compliant than just figuring out what the rate is and how much you're paying into that state. So some of those other things are things like Nexus, product taxability, jurisdiction assignments, exemption certificate management, state and local tax prep and filing, and audit readiness. So all of these things that are sitting kind of below the iceberg are things that are also a part of being sales tax compliant within your organization. It's not just having the correct rate. So we're going to talk about these a little bit. We're going to start with location, 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 and why is location important? So this has to do with Nexus. It used to be very commonly that, Nexus had to do with where you had your building, where your company was located. It was the brick and mortar building. But that is really no longer the case. Nexus is much bigger than that now, and every state is different. They're really trying to, capitalize on how they get more revenue into their state, as we discussed earlier. So you're going to see all kinds of weird and wacky things that may cause a business to have Nexus in another state, and it's not just having a building. So, one of the next most common things that kind of came up over the years was having remote employees. So, of course, if you have employees in other states, that could give you Nexus in those states where they're located. And it does not matter what their role in the organization is. It just matters that you have somebody physically in that state. But on this chart, you'll see there's a number of other things. If you have a hosted data center, if you're using a third-party carrier to move your goods from one state to another, that could give you Nexus in a state. Having investor or board meetings in a state. So if you have remote meetings and you move to a fun area, let's say Vegas or something, that could cause you to have Nexus in that state. And a lot of companies and individuals in those companies just are not aware of what gives them Nexus in those states, and nor should they. That's not their core competency. So there's really a lot to just understanding where you have Nexus. So that's the first step. Where are you required to collect and remit sales tax? There's another list here of some additional things that we consider Nexus creating activities. And again, every state is different, but there's just another list that's a little easier to read. Where your inventory is located. If you have inventory located in multiple warehouses around the country, you could have Nexus in those states. If you're doing drop shipments, attending trade shows, that's one that's important to us. We send people to trade shows all the time. If we send somebody to a trade show in a specific state, that could require us to have Nexus in that state. So the Nexus challenge is very important first for a business to understand, where am I required to collect and remit sales tax? So the next thing becomes the jurisdictional assignment. And what that means is, once you figure out that you have Nexus in a state, now what are the rates and what are the rates in each specific address or jurisdiction of that state? A lot of times, a lot of our ERP systems are using zip codes. And unfortunately, zip codes were used for mailing. Zip codes are not really used for state tax jurisdictions. So I'm going to show you something about that in a minute. But we have over, and there's just some numbers here, I won't read all of these to you, but over 150 million mailing addresses across the country. And there's over 11,000 jurisdictional rules. So that's a lot of stuff to be on top of. So now once you've decided that you have Nexus in a state or 3 states or 4 states, now you have to figure out, okay, how many different rates are in that state? And where exactly are those rates? Because it could be very different based on where an address is. So I'm going to drill down on that a little bit. We like to use Denver as a prime example. So in Denver, this is the Denver prep, or the greater Denver area. So you can see there are about 6 zip codes here represented. And then the color coding behind that is all of the different tax rates. So if you're in 80237, for example, you're fine. That's basically one tax rate. That is 7.35% across that zip code. That's perfect. But if you get to the 80111 zip code, you'll see that there are 4 different colors, which means there are 4 different tax rates in that one zip code. So it's not as easy as just saying, I live at 100 Main Street and in Greenwood Village 80111 and my tax rate is 7.72%. That's not always going to be the case. And so you want to make sure that you're getting the actual right zip code or transactional rate based on their zip +4 and their specific address. I'm going to drill down on this a little bit further. When we look at those rates, there's any number of different jurisdictional rules that come into play with those rates. So you'll see you've got your state tax, your county tax, your city taxes, and of course there's different counties and cities within that zip code. And then you've got really small things like a football district tax that was voted in by some school district likely, and a science and cultural district tax. So you need to make sure that you understand exactly which addresses are going to get each of these different tax rates. And it can be as different as having somebody across the street or around the block having a different tax rate, and one of them having one of these additional rates and one of them not. So you need to really understand where the boundaries are and how to calculate those rates properly. So a couple of other taxability troubles that we want to talk about comes down to product taxability. What exactly is taxed and in which way in which state? So it's not just, is it taxed in this state or not? That's one question. Is this product taxable in this state? But how is it taxed in this state? So there's a lot of fun and interesting things here that you may learn. I won't read all of these, but you know, when you get to Colorado, if you're talking about takeout only, if you have a cup for a takeout beverage, the cup is not taxable. But the straw and lid are considered extras that you don't need. So if you have a straw and lid, those are going to be taxable in the state of Colorado. A bagel, the difference between sliced and whole in New York, does it become a prepared food? It becomes taxable. And if you guys can think about this one, a candy bar in Indiana. So Nestle's Crunch is taxable and Kit Kats and Twix are not. The neat information behind this is that the amount of flour or the content of flour in the Kit Kat and Twix that make them more of what they would consider a food item than a candy item. So again, in my world, that means I can eat as many Kit Kats and Twix as I want because they're more of a food, but they're also tax exempt in the state of Indiana. And those are the kind of things that you have to understand. I mean, if you happen to be in the candy industry, you have to know that, you know, in Illinois, everything might be taxed when it comes to candy bars, but in Indiana, there are very different rules on how your candy types are going to be taxed. And there's many more than this. For example, cotton balls. In some states, a cotton ball is considered exempt. It's a medical device, whereas a cotton round, the cosmetic wipes that you have, that's considered cosmetic and that would be taxed. And so they can be very, very different rules based on the products themselves. So let's take a minute. I know you're all muted. I'll just let you think about this for a minute. In Pennsylvania, state and U.S. flags are not subject to tax, but if either is sold with accessories, the entire purchase becomes taxable. So again, I know you're all muted. I'm going to go ahead and hop into the answer so you can take a look at this. This is actually true. So they decided to give you a break if you're going to be patriotic and buy a flag, but heaven forbid you get the pole or the clips or anything else, and now you have to pay tax on the entire purchase, including the flag. Again, these are just some of the things that you have to figure out within your business model and the states that you have Nexus in, how these are going to be handled within your environment. So let's talk about automation advantages and why it's important to automate. So how can sales tax automation help your business? The most common and obvious thing is just improving efficiencies. A lot of people are spending a lot of time researching rates, maintaining all of that information in their system, making sure that they're registering in the proper states, you know, updating all of the different things that they have. You know, automation will help to improve your efficiencies and save time, but the bigger thing here is mitigating your risk and increasing your accuracy. Again, most of you, I'm assuming that your daily chore is not, your business's core function is not sales tax. Your core function is somewhere else. So you want to make sure that this is as easy for you to do and as the lowest risk possible, so that you guys can go on with your core competency. And that's why automation is so important. We like to liken this a lot to payroll. You know, again, payroll is a necessary evil in most businesses. There is not a lot of reward other than having happy employees that they got a paycheck, but you certainly want to do it right. And there's a lot of things to take care of. There are deduction codes and all these different things that you have to take into account over time. And so we liken ourselves a lot to payroll. Why do you want to mess around with that? Again, some more numbers. This comes from that Wakefield study we talked about. 56% of companies have found that the cost of an average audit was over $50,000. So heaven forbid, if somebody's been audited, the average cost is over $50,000. That comes from not just the back taxes themselves, but there are also fines or penalties and interest, and that's including the time spent. So you have to have somebody in your organization, or maybe a couple of people, spending time with that auditor, pulling the documents that they need, answering questions. All of that takes time. And so that's costing, you know, over $50,000 to companies. And it can be really grueling and labor intensive to take care of all of that. The other thing that a lot of people consider or think about when they think about audit is they think about just the back tax. But also when auditors come in, there's a look back period. They can look back from 3 to 10 years, just depending upon the state. And so if they find a mistake in the year that they're auditing, say 2017, they can actually look, you know, smooth that over X number of years, and then they can assess anywhere from 10 to 30% in penalties on top of that. So audits can be very, very expensive. So why do companies outsource? You know, on top of the fact that, you know, it should, you know, make their job easier and they should mitigate risk, people are doing everything they can. Organizations have people that are really trying to stay on top of that. But no matter what they're doing, there are 75% of professionals who still believe that an auditor will find a mistake when they come in. And you know, I should have talked about this first. Actually, they did a fully loaded cost of employees who are taking care of tax compliance within their organization. So this would include their, you know, the salaries, a portion of the salaries of the people who are taking care of any piece of tax. That would be researching rates, completing forms, talking with auditors, talking with tax professionals, their fully loaded rates. And so the average yearly cost to be compliant in a company, and this is a big range, $67,000 to $400,000 based on, you know, your company size and how big of a tax effort you're putting into it. But it can cost a company $67,000 a year to stay compliant, and 75% of tax professionals or business professionals feel that auditors will still find a mistake. So that's a big chunk to still not be 100% sure that everything is right in the system. So we want to talk a little bit about how we, Avalara, address some of those challenges that we talked about, those pieces that are below the iceberg. So, you know, the rates were, again, at the top, so let's talk about Nexus first. With Avalara, when your business changes and expands and you may start having Nexus in another state, you maybe get a remote employee, or you start selling into another state, or you add an office, all you need to do in our system is go ahead and make one click of a button into that state saying, I now have Nexus in the state of Alabama. I don't know why I'm picking on Alabama today, but it's a one-click jurisdictional add. We already know the products that you have, and we already in our cloud application know all of the rates and rules in Alabama. So for you, all you have to do is do a one-click add to that specific state that you now have Nexus in. And when it comes to product taxability, we have a group of professionals who are constantly looking up what's happening in states, what they're doing with products. Once your products are mapped in our system during the initial setup, you don't have to worry about any of that. We have all of that stuff maintained and automated in our system, so you don't have to worry about what the product taxability rates are anymore. We just know what your products, again, if you happen to add a new product line into your business, you'd simply map that to our system, and we would understand all the rules in each state on how that product would be taxed. Jurisdictional assignments. One of the great things when you add our AvaTax product is that we also do an address validation. So anytime you enter an address in the system, we will validate that and make sure that we have the ZIP+4 and that we get a true rooftop location of that address. So that when you're asking what that tax rate is at that address, we're going to know exactly what that is based on the full jurisdictional address and not just the zip code. So you can feel comfortable there. Also, if you're shipping product, the nice thing about that address validation is you're going to have less misships likely because we're doing address validation for everything in the system. Exemption certificates. We do manage exemption certificates for customers. We can request those from the customers, store them in our system. They're easily retrievable. We can validate that information and also look for any that might expire. So we take care of that exemption certificate management as well. State and local tax prep and filing, we have a returns and filing service. So you can go ahead and look in our portal at what has been collected in a specific jurisdiction. You can validate that dollar within your subledger and approve that, and we can go ahead and file that state tax return for you. And then finally, audit readiness. I mean, easily accessing your tax data. I kind of alluded to the fact that we have a portal. All the transactional information is stored in the portal. You can get reporting. You can look at every transaction and view, you know, what taxes were applied down to each specific individual jurisdiction. And when it comes to audits too, they can go up there and they can get all the exemption certificates if an auditor is looking for that. So it makes all of the data really easy to get, and it should shrink the time of an audit so that you're not running all over digging through paper files. Everything should be easily accessible in one portal. So if we talk about the products themselves, we have a suite of products that can be used independently or together. So the first product is our AvaTax, our tax calculation tool. First of all, as I mentioned, this is a cloud service, and we have a team of people who are constantly evaluating different states' rules and regulations around rates, tax boundaries, product taxation. So we're constantly in touch with local governments, making sure that we understand what the new rates and rules and changes are going to be, and making sure that our cloud service is current and accurate when it comes to the tax calculations. We then read into your system. We read into Dynamics NAV, as well as, you know, other systems that you might have bolted on, an e-com or a POS system. And, you know, you'll send the transaction information up and we'll return the taxes. With that, in conjunction with that, we can add our cert capture product. That's the exemption certificate management. So during a transactional piece, if an exemption certificate is required, we can send an email to a customer asking them to fill it out. They can submit it back into our system, where it will be electronically stored and easily retrievable. The data will be validated, and also it will remind you if there are any exemption certificates that may or may not be expiring in the near term. And then finally, that returns filing that we talked about. We can do returns filing. All of the data, as I said, is stored up in the portal. It can be reviewed and approved. And then with one click of the button, we can return those, we can remit those returns to the local government. So you can see it's a full solution. Like I said, all of these can be used independently or together. We do have customers that even have just done returns, believe it or not, where they've maybe sent us, you know, their transactional data, and we do the returns for them, just because the states are so different. All of the return documents can be very complex. I think I heard one of the forms can be multiple pages and very, very complex to fill out. So all of these can be used, again, together or completely independently. To date, okay, my button's not working, sorry. To date, we currently have over 20,000 customers using Avalara. And, you know, very seldom do we have anybody that starts a service like this that decides they no longer need it. We've had a continually growing number of customers over the years that have added this. And, you know, that some of the things that their feedback is, I mean, they love the accuracy and how efficient it is. We integrate to over 600 products. So as I mentioned, not only the ERP like Dynamics NAV, but as you grow and expand your business and maybe move into other specialties, if you add a retail, you know, an online website, a store front, or if you do a POS system or anything like that, a CRM to start doing that, we bolt on to over 600 different products. So again, I know I kind of talked about this a little bit, but we call this the Subsecond challenge. So when you're entering a transaction, whether it be in NAV or, you know, some other system, and you're using our solutions, what's going to happen is it's going to go up and it's going to look at a couple of things. And I'm going to, you know, make this a little bit simpler. You can read through this diagram, but essentially it's going up to our service. Once you're using AvaTax, it's going up to your service, and it's looking at the state and understanding the state, you know, taxing rules, and then it's saying, okay, do you, company, have Nexus in this state, yes or no? And if you do, it's saying, is this customer exempt from tax, yes or no? And so that can be either pulling from the cert capture that we talked about, or you can manually be tracking whether or not customers are exempt. And then it's saying, is this product taxable, yes or no? And if yes, how is it taxed? And it's going to send the tax right back into your ERP. All of this is going to happen in about 0.4 of a second. The other thing that's really neat in here, I didn't talk about it, but I don't know how many of you are aware of tax holidays. We also take care of understanding and having tax holidays set up in our system. So in some states, one of the most common ones is maybe the 2 weeks before school starts. There will be a tax holiday on certain school supplies for a period of time where if you buy any of those products, they are exempt from tax. It's not all year round, it's only on certain items and only for a certain period of time, but our tax solution will take care of that And so somebody doesn't have to be in your system overriding that and saying, oh, wait, I don't have to charge tax on these items for this time period. So that's just another key piece of information. So that's the Subsecond challenge. As I mentioned before, and I apologize, my window's not progressing, we do integrate to over 600 products. So I've talked about this a couple times. I won't go into detail. This is just a listing of some of them. But again, to make you comfortable as a customer that as your business grows or changes, you can stay with AvaTax and have what we call one source of the truth. So whatever systems you're using are going to read up to our cloud service, and they're always going to get the same tax rate back. Looking specifically at what you're using in terms of Microsoft Dynamics NAV, which is now morphing. You've probably heard of some of the things, Dynamics 365, I think Business Central is the newest verbiage that they have. I know we have on here as finance and operations, but the different pieces that we have full integrations with. We do have the complete tax compliance solution. So like we said, all of the rules and rates are automatic. All of that stuff is maintained in our systems and fully integrates with the certificate management and the prep and filing. So that is pretty much all that I had today. I'm going to go ahead and open it up to questions, and I think that there maybe is something here. Maybe I don't see anything. So I'm going to open it up to questions, and I don't know if they're still typing them in.
Stacy?
Yes.
We do have a couple of questions.
Oh,
the first one is, do I have to change any of my current Microsoft processes to use Avalara?
That's actually a great question. No, the answer is no. This actually will become a lot easier. So other than the initial setup, where you're going to put in a couple of key things and map your products, after that, all of your processes in terms of transaction entry and posting and product management, nothing has to change at all. It's a great question.
Okay, next question. When taxability rules or tax boundaries change, do I need to do anything to update my tax schedules?
Yeah, absolutely not. So all of those things are maintained up in the cloud system. So the minute that those go into effect and that anything changes, whether it's a rate or a boundary, anything changes will automatically be updated in our cloud service. And the next time a transaction is pulled from your service or from your system, it will automatically have that new information available. So there's nothing that you guys have to do in terms of maintaining that information.
All right. Well, thank you very much for the presentation, Stacy, and thank you everyone for attending.
Welcome.
If any of you have any questions that you would like to ask us, you can contact Stacy or you can contact your account rep here at Innovia. Or if you like, you can contact myself, and you'll get that from the webinar. But like I said earlier, we have recorded this webinar, and it will be available on our website later this week for you to review again or share with any of your colleagues. And I just want to also remind you that we have our events page that is always being updated on our website, innovia.com, and then just click on events. And we have next week a webinar on what NAV has to offer in warehouse management system. Our very own Bob Beard is going to be presenting that webinar. And then on May 16th, we have EDI made simple for Dynamics NAV, integration without embedded customization. Data Masons will be presenting on that. So if you find anything that is of interest to you, please feel free to register for the webinars. And thank you again, everyone, for attending. Thank you, Stacy, for the presentation, and we look forward to seeing you on one of our next webinars. Have a great day.